Hello there, and welcome to the value of everything. So I really fancied doing another Bitcoin update. There was a little bit of a turnaround in the market, and I really am pleased with myself, wording a few words of caution in regards to volatility and how that Bitcoin price can turn on its head very rapidly. It seems that the speculators or the chartists out there were looking at that year range as a ceiling, which I did mention beforehand. And then once they hit that price target, they sold the Bitcoins to cash in at that point. So it goes into a little bit of a descending turn now. So it just sort of reached about $437 buys you one Bitcoin, and it shot down to 380. So everyone's just, well, the speculators or the traders are just snatching their little piece of the pie just right now. But still, even in relation to the drop, we still have climbed quite rapidly, and I think that this will probably be on the news radar a bit more. Even so, volatility is quite an important thing just to recognize. When there is volatility in a market, traders and speculators can make a lot more margin and profits because of the rapid ascensions and descensions in the trading price. So I just want to go back into why Bitcoin is so interesting. One of the very interesting points of Bitcoin is we are cutting out the middleman. So whenever I do a transaction online to somebody to buy some, I don't know, say some headphones, I go to either some kind of eBay portal, and then I use PayPal. The PayPal connects to my banking account, and my banking account transfers the money to PayPal, and then PayPal will transfer the money into the other merchants' accounts, and therefore we have a number of little steps of the way where there's transactions which are occurring, and either directly or indirectly people are taking a little bit of a slice of the pie when that transaction is occurring. Now imagine if we had a scenario where I can just say, hey, yeah, what's your account number? And I can do a direct transaction, and it doesn't even need to go through my bank account. So I don't really need to get my bank account and get their bank account, and I make a transfer in my account to their account, and then there's a number of accounting entries which go via them. Can you see there's a little bit of confusion, and there's probably a little bit of a slice and currency exchange, a middleman slice as well. Well, this doesn't go through this system of having some middleman where we have to transfer the funds from one to the other. So say if let's just make it a little bit more simpler. Say if we both were at the same bank and we wanted to transfer funds from one account to the other, we still need to contact the bank to transfer to the other. Now, with the blockchain, we are actually directly transacting with each other because we just have to have each other's accounts, and we just I do a send transaction to the other person, and then they receive it. And because the accounting ledger or the blockchain of all history is independently sourced on every computer which has this the blockchain on it, they are all independently running. They see the transaction going through. One of the comments I actually had recently just confirmed this. Then there's independent checks which are running through the nodes to see that this is confirmed. And then if you want a bit more of a secure check to see that that's gone through, there's another computer which checks it as well, and then another one. And then once you get to about 2 or 3 confirmations, then pretty much you guarantee that transaction has gone through. There's probably like a certain amount of risk if it's just one confirmation. Maybe there could be somebody manipulating the node to say that, oh yeah, this transaction did go through, but Beyond that, for small transactions, it's pretty harmless. There's probably not going to be too many thefts on that scale. But when it comes to larger transactions, if you're pushing through a lot of money through the blockchain, it's probably very well worth to do a number of confirmations back. So that is very important. And once you cut out any middleman, you are making basically you're putting more money in the pockets of the customer, and therefore if they're not paying the banks or they're paying these merchants, online merchants instead, then they've got more capital not to spend towards bankers or online facilities, but on other things that they require in their lives, maybe more entertainment, maybe more labor-saving devices, but something that increases living standards. So this is very important, and you will obviously, if you see the size of banking sectors and online merchants and things like that, this is an incredible amount of saving that the customer or the people can make from this incredible piece of technology. Another thing also as well, just to outline, is that because we have a lot of financial industry interest and we have a lot of government interest as well. I would claim they're not quite as quick as what the financial industry probably is, but because of this enablement of property ownership, so where we have an account and I do a transfer to somebody else, we can really push out that account a lot further to, say, digitally signing all of the items that I possess in my house. And therefore, if somebody steals it away from me, then we can work out on the blockchain that was assigned to me. This can come down to property rights of my own person. So if somebody punched me in the head, I might be able to have some kind of insurance facility or somebody who can work as an arbiter who can basically provide insurance and even provide some kind of legal discourse between the two people that have been in a altercation. So the flow and the ramifications of the Bitcoin technology is absolutely mega huge, and obviously if you think of the middleman in terms of banking, if you think of the middleman in terms of government and how there's always distortions where there's power, there's corruption, people get paid to build bridges for a lot of money when they really shouldn't have, this really does improve in an incredible degree how much people will have for themselves. They're not throwing their money away to the banks or throwing their money away to interest rates or throwing their money away to insurance premiums or taxation. It's really going to be in the pocket of people, and then they can choose how to build their lives and improve their lives and raise living standards. Just on the other note, obviously we have an incredible amount of financial industry interest in this, and one of the major reasons is that a bank will have a number of divisions which operate in settlements, accounting, and the transfer of wealth. So you probably have an opportunity there to merge all of these divisions and have a very, very, you can probably get rid of a lot of labor and staff, and you can have a very trimmed down network which can transfer the settlement, the accounting ledger, and the money all in one system. And that is an incredible piece of technology, an incredible amount of saving for big banks. And that's why they love this technology, but they're scared of it a little bit as well, because they don't quite have the power as much as what they would have. But there is an incredible amount of savings and leanment, and they can make a lot more money for their shareholders if they explore this technology and use it to their own means. Okay, so that's one of those things, and therefore we do have some interesting little race which is going on at the moment between the free market, so Bitcoin and the blockchain, and there's a number of other independent free market technologies out there as well, competing as, like, say, Litecoin and things like that. And then also you have the bankers, and they're using this very smart technology in the background, but working with the governments as well, just to keep the regulations. So you could say, for an example, that the government might want to be stopping other countries which it dislikes or doesn't want to have certain trade agreements, or puts a lot of pressure onto another country. They have to work with the other banks just to pile pressure on these other countries. You can think of Iraq, or you can think of South Africa during the apartheid. You can manipulate other countries for good political means or bad political means. So there is this idea of financial terrorism, but it depends on which way you look at it. You could say also financial freedom fighting, but you are using the state as a use of force, and that is in a lot of ways immoral. So yeah, we do have the race. The race is on. The free market is racing against the government and the banks. And the thing is, it's an interesting thing. The governments and the banks, they will incredibly enjoy a revolutionary technology which does raise living standards, improve lives, and lean out and give much more people more money to spend on things, because you do have more of a high opportunity for taxation as well. However, it really tangles the idea of what taxation is. One of the reasons why you make a transaction in a bank, when you make transactions in a country out of that currency, is because you probably are asked to pay your taxes in that currency as well. So even if you were using Bitcoins to do your day-to-day business, eventually the government will come along and say you owe this much in our national legal tender currency. So you would have to exchange all your money back into that sovereign country, and obviously because they have got the rule of law and they've got the rule of force, you need to apply and abide with these regulations. So, sorry, a few little tangents there. I've gone around and about in a lot of those terms. Also, if you could think of this market, the actual just blockchain and the Bitcoin market is probably nowhere near in comparison to, say, the gold market, the oil market, or anything like that. So you do have opportunities and speculations, or you could have a few mega banks involved in this market already, where they do have opportunities to pump the market and dump the market. And that is an ideal sort of spot where you can really manipulate a price of a currency, and you can make a lot of money. You start pumping up the price, people end up speculating and jumping on, and the greed builds up, and then you pull the price, you take your massive chunk of stock out, and then that piece shoots down. Now, the thing is, you can manipulate it to a certain extent, but if people are carrying on for the ride and it just continues on, then inevitably, even if you are pumping and dumping the price, people might be scared of the volatility and keep away from it and be scared in that terms. But in terms of you trying to turn the market, everyone's steer clear of it, it's not really going to be the case. In fact, as what I mentioned before, traders do like a highly volatile market because that gives them more margins to work with. Another mention I just want to give, just to highlight just a couple of other things. We are seeing, because the blockchain is the least manipulated market, and it has the least opportunity for people to get involved and use the government and the banks to manipulate prices and things like that. It is protected by numbers itself, the cryptography network. So people, there's literally not much of an opportunity other than sort of say things like pump and dump. But if there's any other suggestions of how this market could be manipulated, I'll be welcome to have any of your comments below. But in terms of this market, we potentially have a really good reader of what's going on. We could suggest that if you have something like the gold market or interest rates where they are decided by banks themselves and things like that, then you do have a scenario where manipulation can occur. However, you could have the Bitcoin market being a canary in the coal mine. So you may want to, people in the eyes of these things and the technologists and stuff like that may like to see this as a precursor to the rest of the markets. So if we did start to see volatility in the blockchain first, this could be a precursor. The canary can fall down and then the rest of the market can shake up and there could be a lot of turbulence down the road. So we might see it in the S&P 500 or any of the other markets a little bit down the line. Okay, and just to round off as well, just another little piece of information. So recently I just mentioned in the last podcast that China has had some changes in their capital requirements. Potentially Bitcoin and putting your money in the Bitcoin is some kind of haven for taxation, potentially. So China has potentially turned a lot of their money into Bitcoins. But also, we have had some reports coming out recently to mention that the Bitcoin has been spoken about. I did have an article which I was going to just lightly read about. Yeah, that by 2030, Bitcoin could be the 6th biggest reserve currency. So to have a little check of that online, I'm just reading that from the RT network, and it was a report which was made by a UK-based Magister advisor. So interesting stuff. And when people start doing these number crunching and working out if it was the 6th largest currency, you can start to determine from that point how much one Bitcoin could be worth in the future. And that really builds upon speculation and things like that. So just some ideas and things that might be one of the reasons why we're having this turbulence and this incredible surge in the market, but just some ideas to think about. 15 years is a very long time, and in that time you could find the price shoot very low and very high, but it's very interesting. I'm sure that that advisory firm has done a lot more digging around in terms of, I think they're based upon technology industry and mergers and acquisitions, so they've probably done quite a lot of homework on this. They've done some number crunching, and I think it's probably quite a good little base idea of how they see Bitcoin being significant in the future. And I just want to mention about how the phases work as well, and we could be entering upon a time where the investment banks and the institutional areas, the brokers and all of those arms of the financial industry could be on the verge of entering into this market and putting some substantial funds into the price of Bitcoins. So without further ado, I will leave you to ponder about these little topics, and I will be back with another piece about Bitcoin if the blockchain is moving in a dramatic fashion as